Ladies and gentlemen, today we're diving into one of the most talked about developments surrounding NIO this week, and trust me, this one's stirring up a lot of discussion across the EV investor community. Recently, Singapore's sovereign wealth fund filed a lawsuit against NIO, and not long after, NIO officially broke its silence with a detailed response. What makes this story so fascinating is that NIO's official statement practically mirrors what many long-term investors have been saying for years, that this entire case isn't about anything new or relevant to the company's recent performance. So in this video, we're going to unpack NIO's official response, the real reason behind these accusations, and what this means for the company's stock moving forward. This is not financial advice. Please do your own research. To begin, let's briefly recap what's going on. Singapore's sovereign wealth fund has launched legal action against NIO, reviving claims that, according to NIO, have already been addressed years ago. What's particularly striking here is that this isn't the first time NIO has faced such allegations. If you've been following the company closely, you'll remember that back in June 2022, a short seller report by Grizzly Research made nearly identical claims about NIO's accounting and financial transparency. Now, fast forward to today, it appears that the Singapore fund is bringing those same points back to the surface. But here's the twist. NIO made it very clear in its response that these accusations are not connected to the company's current business operations, financial health, or performance in recent quarters. According to NIO, this case concerns historical issues that were already resolved long ago. So effectively, we're looking at a situation where old narratives are being recycled to create fresh panic in the market. Now let's talk about how NIO handled this situation, because honestly, the timing and tone of their response were spot on. In their official statement, NIO emphasized that the claims have nothing to do with their recent operations. They called it a non-new incident, stressing that the Singapore fund's allegations do not reflect NIO's present-day performance or growth trajectory. This immediately helped calm the markets. At the time when the lawsuit story first broke, NIO's stock saw some volatility. During pre-market hours, the stock dropped nearly 6%. But as trading continued, the panic started to fade. By the time the markets closed, NIO had recovered almost entirely, trading down by just about 0.4%. That kind of rebound shows how investors were quick to realize that there was no solid basis for fear. The markets in Hong Kong and Singapore initially reacted with uncertainty, but once the facts came out, sentiment shifted fast. People began to see that this was less about NIO's fundamentals and more about short-term traders trying to exploit old stories for profit. And here's where things get even more interesting. Many long-term investors believe that this renewed lawsuit is nothing more than a strategic move by short sellers who've been frustrated by NIO's recent comeback. If you've been tracking NIO's performance, you'll know that the company's stock has been gradually recovering since mid-July. That's when NIO hosted the pre-launch event for its ONVO L90, and from that point onward, investor sentiment started improving significantly. From July 10th onward, NIO's share price began climbing steadily, not because of quarterly earnings, but because of growing optimism around new product launches, rising orders, and stronger market demand. So if you look closely, this lawsuit seems like a desperate attempt to shake confidence at a time when NIO's momentum is actually building. Let's talk about that momentum. After the ONVO L90 pre-launch event, NIO followed up with its full launch on July 31st, and the response was overwhelmingly positive. The L90's pre-orders gave the market something tangible to be optimistic about. And then, the ES8 model, another premium NIO vehicle, came into the spotlight, further fueling excitement. At that point, even short sellers began to feel the pressure. Both models, the ONVO L90 and the NIO ES8, started gaining solid traction, with each receiving strong pre-order numbers. In fact, the ES8 slightly surpassed the L90 in total orders, which highlighted NIO's growing customer appeal across multiple vehicle segments. So when you combine that level of product momentum with improving investor sentiment, it's easy to see why certain institutional investors who previously bet against NIO might now be feeling frustrated. Their losses on those short positions could be exactly why we're seeing this kind of recycled negative news surface again. Now, here's the important takeaway: long-term NIO investors aren't rattled by this noise. They've seen these tactics before. Those who've been following NIO since 2020 know that the company has faced and overcome much bigger challenges. Whether it was market crashes, production delays, or aggressive short seller reports, NIO has consistently managed to recover stronger than before. So for those who use the recent dip as an opportunity to accumulate more shares, this situation might actually end up being a blessing in disguise. As many investors believe, NIO is highly unlikely to fall back to those extreme lows we saw in the past, not to $5, and certainly not to $3. The company's fundamentals have evolved dramatically since those days. The product lineup has expanded, deliveries have stabilized, and the ONVO sub-brand is opening new doors in the mass market segment. This lawsuit, while noisy, doesn't change the bigger picture. NIO is in a completely different phase of its business cycle. The firm is expanding its production capacity, increasing its delivery pace, and improving margins through software and energy services. The company's brand perception in China continues to strengthen, and it's preparing for new growth waves through ONVO and Firefly, its sub-brands designed for family and affordable segments. These developments are what truly matter to investors, not a recycled claim from 2022 that's already been addressed. So, to sum it all up, this lawsuit might sound dramatic on the surface, but when you look deeper, it's really just old news dressed up as something new. NIO's official response has made it clear that the accusations have nothing to do with its current operations or performance. The market quickly realized this, which is why the stock bounced back within hours. For long-term investors, this whole event reinforces one key lesson: stay focused on fundamentals and ignore short-term noise. Because NIO's ongoing innovation, its expanding EV lineup, and its strategic execution are far more powerful than any temporary headline. And if history tells us anything, it's that every time NIO has been doubted, it's found a way to prove the critics wrong. So what do you think about NIO's response? Do you agree that this lawsuit is just a recycled tactic by frustrated short sellers, or do you think there's more to it? Let me know your thoughts in the comments below. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.